So Trader Boys, we are live. All right, so we're gonna go. I got so many things I want to run through in the market right now to kind of give you some insight of the probability of what's going to happen from this morning going forward. So let's go through. Let's jump over and we'll come in and we'll want to look at just kind of what's happening in the major markets first. Right. So let me just find my screen here for you. We don't want a menu, we want this. All right, we are gonna start. Show all windows. Let's start with this one here. So here's what we got. We got the Russell futures up right now. Russell futures, we're on a 60-minute time frame. This is kind of where your major demand level is on the 60-minute time frame of the Russell. If we look at support resistance aspects, here's price support becoming resistance, right? And we came down, we just kind of got really close to the bottom of that support area right there, right? So that's the Russell. Now, Russell's I'm not too concerned about. What I really want to look at is the S&P. So in the Trader Boys, Trader the Pros trading room, this is what I just posted in there. And this is kind of the insights that we're looking at here. Is you look at this purple line here. This purple line is a major support resistance area. So let's come out to a 60-minute time frame and kind of see what we're looking at here. And this support resistance area actually goes back a lot further. So this is a major area. I mean, if we were to drag this over, you can see support, resistance, right? Resistance, okay, resistance. So this price area here is major. It's huge. It's huge. Right, so this is the area when you're looking at, we were in this downtrend here, we had to break through. Now we broke through, we came right back under it. Now we got back above this yesterday. Right, so this is a really important area. So not only did we have the support resistance area here, okay, we also had this little overnight demand area here. Right, so you can see the market's dropped all the way into this, all the way down to the bottom of this area, right? And we're starting, right, trying to reverse out of here. So what we need to see here really on the 60-minute time frame is I want to see a close above this 20-period moving average. Right? This 20-period moving average has kind of been huge for the S&P futures here, right, at reversal. So I want to see a close above this, and that's going to then give me the indication we got strength, and we should follow through and reverse off this area here. So that's looking really good. Let's jump over to the NASDAQ. So the NQ is the NASDAQ futures. Right. This was the initial area I posted in the trading room this morning. We broke that area here. Now look at this. We came right down to this area right here. And that's our next area of demand right there. And look at that, to the penny. And people tell you all the time. And this is the thing in the financial industry. Right? There's so much bullshit out there in the financial industry, written in books, on YouTube. Instagram is a huge one where there's so much bullshit out there of education and what should happen in the markets. Right? The thing in the industry, they say you can't time markets. You can't pick tops and bottoms in the market. Look at this, to the freaking penny. To the penny right there, boom, to the penny. Now, it may not be the low of the day, but we've got a pretty good chance with everything that's happening in the market right now for that to be the low of the day. Right? So I'll claim that. I'll take that. Right? Now, we want to break above this here. You can see these candles highs right here. That was selling pressure, break above here, and we can run. Okay, so we got a really good potential here of a nice move up for the remainder of the day. So beautiful little retracement right down into a solid area of demand right here, and we got a pretty good opportunity now for a nice move up. Okay, now you got a trend line coming through here, and we got to break this trend line. Right, so coming down right through here is that trend line. And we've broken through that. Okay, now we got to get the close above. So we're now above these candles right here. We're above that trend line, and we're starting to get the steam train coming through here. Right, so we're going to start seeing a nice push off this area. Okay, so we're looking at right around that 10 o'clock time, 10 o'clock reversal. Okay, this happens about 78% of the time or thereabouts on most trading days, and this is a strategy that I'm looking for all the time, especially when the markets open up higher or lower on a gap. Right, look for the gap fill, 10 a.m. reversal, right? Very powerful and consistent strategy. Okay, so we're looking pretty solid here, Okay, I want to see that move up. I want to get above these moving averages, right, to maintain and gain that strength there. Okay, now another big one here. Let's go through, and I'm going to come over. I'm going to bring you into another page here. and this one's kind of important, is if this market's really going to reverse, okay, really going to reverse, we got to look at some of the big stocks and the influence of those big stocks. So obviously that's going to be tech, right? But before we go to tech, okay, I want to bring you into the Dow here. Now, UNH is the biggest stock in the Dow. Okay, UNH is the biggest stock in the Dow right here, and it was negative. It was negative. Okay, so this is another post that I just put out there in the trading room, is keep an eye on UNH, because UNH had a setup. Okay, so let me see if I can find that setup for you on which chart I had that on, because I got so many charts going on here. It would have had to have been on this charting platform. Just give you some insight to this, because this is understanding kind of the mechanics of what's driving a market, right? The mechanics of what's driving a market. So here we go. Here we go. Let me flip over and get onto this page for you so you can see what I'm looking at. And it's going to be this one here. No, I just want the window. This guy. Okay, so here is UNH. Okay, so this is the biggest stock. Now, when you understand mechanics, you understand kind of the fundamentals, if you will, right? The mathematical, the structure of a market, and it's really, really, really important to understand the structure of a market. And this is where the knowledge and experience of veterans of the market come into play. I mean, I got 18 years of experience into this. I've traded with some of the phenomenal traders of the world. I've been very, very fortunate in my career to be able to have access to these individuals, and they just share so much information. I mean, you're talking about guys that, one of the highest volume traders on the trading floor for the oil futures markets and stuff like that. So being around these guys, they can give you a lot of insight to what they did as an institutional trader, and having that insight is just huge. It's absolutely huge. So that information, I was never an institutional trader. I was never a professional trader from that standpoint, right? But I've been around these individuals and gained access to the knowledge of what they did and how they did and how they influenced markets. So when you're looking at the Dow, the way the Dow is calculated is based on price. The highest priced stock has the greatest influence on the movement of the Dow. Right? So Apple used to be the highest priced stock, and Apple used to push and pull the Dow all over the place. When Apple went through its split, Apple's now halfway down the list. So Apple really doesn't have a lot of influence on the Dow anymore. Right now, UNH being $311 stock is the highest priced stock on the Dow. It now influences the Dow the most. So here's what the post was in the trading room, is look at this little demand level here on that 60-minute time frame. Right now, let's be completely transparent. I didn't post this before the market got down here. I did post it as it was just leaving this on, because I'm like, wait a minute, let's go look at the Dow and see what sort of strength the Dow could produce if UNH could reverse. And is there an opportunity that UNH could reverse? Could it hit demand and reverse and go up? Right, so this is an indication of looking at market strength. Right, so UNH hit this demand level, right? It's a pure proven demand level right here on this candle right there, right, and is pushing up. Okay, so what we need to see on UNH is we need to see the continuation of this move pushing to the upside. Right, will we get it? Maybe, maybe not. Right, but these are all the probability stacks that we put into play, right, to understand, okay, what is my probability if I enter this trade right now of making or losing money on this transaction? Right? All trading is the stacking of probability that we apply risk to. That's all trading is. It's nothing more than that. Right? So you can go in and you can look at all this different information, but if you're looking at the wrong information, you're not stacking the right probabilities. Okay? There's one question and one question only to consistently be asking yourself all the time in the markets. And all that question is what is the institution doing? Why? They get the biggest accounts. They get the most amount of money. They push and pull these markets. They control these markets. Right? So what we need to know to be able to stack the odds in our favor is, what is the institution doing? So this is the number one concept that we teach and educate in our trading rooms and then through the courses of the Trader Boys. Right? What is the institution doing? Now, if you can identify what the institution doing, and you can put your money with their money, right, you've now got a massive probability of being consistently profitable in the markets. Does that mean you want to have losing trades? Absolutely not. Right? One guarantee I'll give you, everybody that enters in the market, is I guarantee you'll have losing trades. I guarantee you'll have losses. Right? The skill set is, how big will those losses be? Right? That's under your control. You've got to have risk management in play. And so I meet with many individuals all the time, and The one thing is they get all their money with brokers, planners, advisors. And the question I have is what sort of risk management did they have in place for you? And guess what the answer is every single time? None. None. There's no stop losses. There's no put options for insurance, right? They're in mutual funds, and mutual funds are the highest risk investment vehicle you could ever possibly be in because there's no way to manage the risk. It's like driving a car without brakes. Right? That's exactly what most people's money is invested in their retirement portfolios, which is their money for tomorrow. Right? So you can kind of see my passions coming through here. So I'm getting off target here, but this is critical, is understanding the mechanics of the market. So we're doing a little lesson while we're going through and looking at the marketplace here. Let's look at another one that I posted this morning. And I want to go through a couple stocks that we looked at last week when we were going live. And one of the ones we posted this morning is this guy right here. And this right now is going against me, and that's absolutely fine. I'm 100% okay with that. All right, so this is Zoom. This is Zoom. So right here is ideally what I posted this morning is ideally I wanted Zoom down here around 461. I want to get it down here at 461. Well, why? Look at all the candles down here around that 461 price area. Right? There's all these tails, tail, tail, tail. So if there's all these tails of these candles down here around the 461 area, what is the institution doing around 461? They're accumulating. They're buying. Right? Now, will the market get to 461? Maybe. Maybe. I don't have a glass ball. I can't predict the future. But I can apply probabilities to what will happen. But I have zero certainty to what will happen in the market. Zero. Anyone that can tell you they are 100% certain what's going to happen in the market is full of shit. Full of shit. Right? So what's the probability? So we didn't get down to 461. And by looking at the major markets, looking at the index futures, looking at where demand levels are, right, I said, well, I've got to adjust a little and look at another application, another concept, another strategy. Because if the sellers aren't strong enough to push this to 461, well, I get the probability of a very good company, very strong stock that's already broken a trend line right here, broken the trend line right here on the 60-minute time frame. And now we've got a retracement coming down to this 60-minute time frame. Okay. So if we can get that retracement down to here, then we got a pretty good opportunity at a pretty decent trade that we could make a substantial amount of money on, right? Because this stock can move a lot, right? Which also means you got to take quite a bit of risk, but your risk reward ratio on this is phenomenal, right? So here we are, big move up this morning, okay? Gap fill, which is common and normal, okay? So this is a strategy I'm looking for all the time. Gap up, gap fill, 10 a.m. reversal, right? So we're playing the strategy of what we're looking for here. Now, could I lose in this trade? Absolutely, 100% we could. Okay, probability stacked in my favor right now to produce a profit, but could we lose in this? Definitely. Right? If the sellers push through the demand levels I just showed you on the index futures, the probability is Zoom will go down with it. ZM will go down with it. Okay. So what was the strategy applied to the entry here instead of waiting for 461? Well, what we're looking at here is we come down, and this is on a 5-minute time frame. Is you can see on this 5-minute time frame, let's kind of zoom in here a little bit. Okay, right here, you've got these candle highs right here, right? So these wicks indicate where the sellers are. Now, if we break above those candles highs, what that now informs me is these sellers no longer exist. Now, if the seller no longer exists, then what's the only direction the market can go? Up. So the entry was at 470. So enter at 470, right? Up we go. We now had a retracement back down to what is now a demand level, unfilled institutional buyers, and that is now proven to be true by these two long tails right here. It's proven to be true by these two long tails. So what could have happened here is you could have got a possibility of an entry coming back to this demand level that was now created after the breakout. And now what we need to see in this position is I need this above 477, right? Well, why 477? We'll come out to, let's say, maybe a 30-minute chart would be the best way to educate you on this. At 477, there's a lot of data here, okay? So what was once resistance, it came to be support, to support to resistance. Okay, so right in this price area, right, as well as this morning, we traded right up in this area, down we go. Right, as well as you get this area right here of supply. So if we can break above this area here, you can take a breakout transaction, breaking above that 477 area, and look to continuation. Right now, if you're already in this transaction, what you would do is you can add to the trade above that 477 area. Right? Breaking through support resistance, you can add to that trade and add on to your position on strength. Right? So this is where looking at a little bit different concept and a little bit more advanced concept. But when you get into a really good position, a really strong position, you don't want to take profit on it too early. You want to actually add to the position to add to your profit potential. And as we do that, we then move our stop losses up according to what the chart allows us to do. One thing you've got to know and understand completely as a trader investor, it is not up to you. You are not the boss in the market, right? Unless you get $1 billion portfolio, you are not the boss in the market. The market is the boss of you. So you've got to develop a skill set and education and knowledge around the market to allow the market to guide you what you need to do with your positions and your money to be successful in this arena. Right? One of my favorite things about the market, it's the largest and greatest playing field of the world. Right? And what's crazy is, I did this when I very first started, but what's crazy is people come into this, I read a book, right? I watch a couple of videos on YouTube, and they step into the marketplace thinking, yeah, I got this. You're going up against the most wealthiest individuals and companies and corporations and institutions of the world. And if you think of Goldman Sachs as an example, they got thousands of individuals that work for Goldman Sachs that are kind of some of the most brilliant people of the world in their division. And if you think you're going to come in and read a book and compete against these guys and win, you're out of your mind. You might have short-term gains while the market's going up, but the probability of long-term gains is extremely low. Right? As soon as the market turns on you and it starts to drop and you keep buying, dollar cost averaging, you're going to get absolutely slaughtered and blow up your account. I've worked with thousands of individuals and I've seen it thousands of times. Right? So this is a trade, full disclosure, this is a trade I'm currently in at 470. We got a small profit on this. Right? Really looking for this to start to move. And we don't start to really see the strong movement on this with the rest of the market, we will close this out. Okay, so if you don't start to see what you want to see based on the markets, then I will close that position and I'll post that into the trading room if I take that action. Really cool thing here. If we go back, we look at UNH. Right? UNH is making a very nice move. Very nice move to the upside. Coming off that demand level. And this is really helping the Dow to pop to the upside and move through. So 30-minute time frame here. This is UNH right here coming up into where the sellers are. So if UNH can blast through and blow through this, we're going to have a nice up day in the markets. Microsoft is looking to reverse. Apple's looking to reverse almost getting a complete pivot, which means we're breaking above the previous candle's high on the 30-minute time frames right here. So everything looking pretty good and solid right now at this point for the market to continue to go higher today, right? For the markets to continue to go higher. So the technology is leading the way with the NASDAQ futures up 1%, and pretty much the rest of the indexes, the S&P, the Russell, and the Dow up 0.5% at this point. So looking solid, looking good. All right, now a couple stocks we looked at last week when we went live, long-term plays. So we're not just going to look at the short term here, we're going to look at the long-term plays as well. One of those was FOCS. So kind of let's do the breakdown of FOCS right here. Not doing a great deal at this point. So weekly time frame over here, the reason for the FOSC transaction was into this weekly demand area right here, right? Very strong stock, just out of the accumulation phase of institutions right here, and hasn't really followed through just yet. Okay, but this was we're looking for the entry. Okay, coming through. So on the daily time frame, all the way down, right back up. Now we traded above this supply area, so buyers in control, proven by now a higher pivot low. So into this demand level and reversed and put a new high in. So this is great right now, into a new high. Right, we got buyers sitting under here. What we just don't have right now is kind of that influx of buyers and all those institutions battling each other to buy the stock to really push this north. So sometimes you can have a little bit of patience, okay? But what you can do on this transaction with these buyers' presence right here is the stop loss can come up under here around that 31.80 marker based on whatever your calculations are. right? You have a level of demand under here, okay? Move your stop up there. That way you're gonna be carrying very little risk or no risk with the guaranteed profit as long as it doesn't gap against you. So that was FLCS, right? So not a big mover, not a big performer yet, right? But we will kind of keep you informed on that. But this is a long-term play for looking at continuation accumulation. On the daily time frame, to really get strength, we've got to get above this trend line, and that we're not anywhere near yet. There's an overlap of a tail to wick, which means that is a daily supply level right there, which we battle with here. And we're not really getting a huge push down off that. And anytime we get a push down, we did get buyers step in and accumulate. So we're seeing everything we want to see here, except for the big strong move to the upside. So I'm going to take a little patience on that and wait. And the next one was XM. XM is a long-term play. Now, oil had a big drop today from 40 open. It's right now around $38. And XM has dropped right deeper and lower, okay, deeper and lower. So this here is a 3 income strategy with insurance. Okay, now we don't have the insurance on this just yet. Right now, I'm doing this in an advanced concept. I'm utilizing options to minimize risk. When we go in and buy a call option gives me the right to buy the stock, which means we're trading the market in the up direction by buying the call option. Right now, with the call option, your maximum loss is what you pay for it. So for the call options I purchased, that were $1.90 per share, 100 shares, it's $190. So per contract, all I'm risking is $190 on a $33 stock today, right? So I can just do absolutely nothing, no stop loss, and the maximum loss is $190 per share. Sorry, $1.90 per share, $190 per 100 shares, one contract, right? So now the objective of this is with that call option, what I can do is I can exercise that call option and it gives me the right to buy the stock. So I've done a couple things. I bought the long call. Okay, I bought the long call, cost me $1.90 per share. I then also went out and just above that, I sold a call, right, for $1 more. So I bought the 35s, I sold the 36s for $1 more, and it paid me 19 cents. So think I'm bringing in 19 cents on a $1.90 position, and as long as the stock doesn't go above 36 by tomorrow, close the market, which is highly unlikely, I'm gonna make a 10% return for the week. Right, so it's gonna give me the availability to make around that 10% return or more every week. Now think about this concept. Right? If I sell at a call option every week for 19 cents, I can do that for 10 weeks. I now own the position for zero, and I can still exercise the right to buy the stock. Right? So I'm coming in limited risk, right? Limited risk. I can only lose what I pay for the call option. I'm then bringing a weekly income against it to pay for that position. Right? Now, when we come into the dividend date, okay, a couple of days before the dividend date, I'm going to exercise it and buy the stock so I can collect the dividend. But if the stock's not where I want it to be to do that, I can then simply just close the transaction down, right? Or continue to sell against it, right? And then when I'm ready and in the right position and XM's doing the right thing for me, and right now it's absolutely beautiful. Look at this weekly time frame. We're coming into the weekly time frame here. The demand level is actually above here, but when we go into, say, the daily, you probably see where this line's coming from. Right, so we're actually hitting on the longer term basis right here, the perfect entry point right now, perfect entry point for this trade. So what we're looking at here is, see the tails right here? Boom, boom, boom. This is where a big buyer is located on XM. Right? Even when we're down here, big buyer pushed up and then gapped up, then traded right down to this point, and big buyer stepped in and off we go. So this here at 33 bucks right now is a beautiful entry point. Okay, now you could buy the stock 33 bucks, put your stop loss below 30. You're risking about $3. Okay, so $3 long-term transaction. Okay, this is a couple of years. But why this stock is paying a 10.1% dividend right now. Every 3 months, it pays you 87 cents a share. That's a huge dividend. Right? So you can get 10% return a year for doing absolutely nothing. Right? But not only that. Okay, so think about this. If the stock goes up, we get the appreciation on the stock. I can sell the call options against this position weekly. There's a second income. And then every 3 months, I collect a dividend. There's 3 incomes. Right? Now, once I've accumulated enough premium from selling the options, I'm going to go out and I'm going to buy a long-term put option on the stock that gives me the guarantee right to sell the stock even if it goes bankrupt. So now I'm building a portfolio that's insured that has no risk. Okay, this is the way you build portfolios. Right? You want an insured portfolio that has no risk, that can bring in either weekly or monthly income, and also have the opportunity to get the appreciation of the stock. Right, so this stock here, over the years, as the economies open up, et cetera, in time, not yet, but in time, right, this stock could go back to $100 a share. You pay 33 for it, goes back to $100 a share. It does a nice $70 profit or thereabouts. Plus, you're bringing a weekly income off that. Plus, it'll be insured, right, in the next few months here. Right? So this is a triple income strategy. Give you an update on what's happening with this longer term play. Right? Full disclosure, this is a trade I'm in, okay, to build that long-term portfolio. Okay. The lower this goes, the better this trade gets. Okay. The lower this goes, the better this trade gets. So if you choose to, you can wait for this 3160. It'd be a great buying opportunity if it does get that low. Beautiful buying opportunity because buyers are absolutely located down in here. Okay. Absolutely located down in there. They are also located where we're trading right now. Okay, so if you're not in this trade yet, and this meets your investing criteria, this is a transaction you can look at. $33, stop loss goes below 30. Okay, and you got a limited risk with a huge upside potential and the opportunity to be. If you don't know anything about options, you still get a great dividend to collect. Right, phenomenal dividend to collect. So that's XM. So that's just a kind of quick insight to a little live session for you. It's been phenomenal to be with you again. I've kind of been missing these live sessions. It's been extremely busy, building product and courses and so forth for the company here, and just super, super excited. I'm getting more excited every single day. You want to get involved in the live trading room? Come into Trade with the Pros trading room. Go to the website, go to plans and pricing, and it's only $69 a month. Only $69 a month. You'll get a week free there. You just missed out on a huge promotion. We got months free, but you get a week free trial there. So jump in there and take a look. Come and explore with us. Come trade the markets with us and utilize the knowledge and skills of some phenomenal traders in that trading room. Have a great day. We will talk soon.